Good afternoon. Today is Tuesday and it's January 24th. The time right now in Singapore is 1:31 in the afternoon, and it's also the third day of the Lunar New Year. And for those Chinese out there celebrating the New Year, 恭喜发财. Now, anyway, overnight on Wall Street, there is hardly any movement, although the market continued to extend higher, following through on last Friday's late recovery. So we can see that the Dow Jones did not have very big move. In fact, on a relative basis, it has the least rebound among the three major equity index in the States. Okay, the highest traded last night was 33,782.88, and we are still a bit of a distance away from the month high. We don't talk about December, we talk about the month high. It is still trading below the month high. So that is an indication. For some reason, we can see that there's a bit of change in performance on the three major US equity index. Last month, as early as last month, we can see that whenever the market goes up, we can see that it was led by the Dow Jones. Okay, but this month, for the last 2 weeks, we've seen that any rebound, the Dow Jones has the least in terms of least rebound. Okay, most of the rebound have been concentrated on predominantly on tech stock, which is the Nasdaq 100. So this is the slight change in sentiment among the three major equity index here. Rebound has been very shallow. So if you want to decided to go short, maybe the Dow Jones right now could be the one of the choice you can consider. Unfortunately, I'm already short the S&P 500 and the Nasdaq, and currently I'm holding on to a little bit of losses. But I do have the idea that as the week goes by, eventually this market is going to unravel. Okay, so I do have a rather bearish outlook going forward. Okay, so in the S&P 500, we can see that the market now is possibly able to challenge last month high. Okay, it is currently at the highest so far for the month. So this is slightly different from the Dow Jones. Dow Jones is still not able to come close to the month high. Okay, whereas the S&P 500 currently as a market rebound, it is trading at the highest point for the month so far. And for it to challenge last month high, the 4,100 is not that difficult. Okay, in fact, I do think that as the market extend higher, there's a possibility the market will actually go into this bracket of prices between 4,118 to 4,232. Okay, so this is my area of concern. If I can see a reversal signal here, I may add on to my already short position. Okay, I'm taking a medium-term outlook here. So over in Nasdaq, we can see that the Nasdaq rebound has been very aggressive, especially last night. You can see the market went up to 11,918, which is the highest so far for the month. And we are now very nearby to the December high. Now, before going to this week, I was having the idea that for the Nasdaq 100 to even challenge the last month high is a little bit remote. But now as the prices have recovered so aggressively, now this possibility now comes back into focus. Okay, the last month high is at 12,166.4. So based on last month's momentum, there is a possibility that market continue to edge higher today, and we will have to watch how it moves. Okay, over in Asia, we're still having the Chinese New Year, and obviously Hong Kong and mainland Chinese equity markets are closed for the festive season, so it will reopen tomorrow. So we will have to for today we will just keep these two market and go straight to the Nikkei 225. Over in Japan, you can see the Nikkei actually opened with a gap up, and then he has already blast through the 1.618 extension here, which is relatively bullish. Okay, so so this rebound caught me flat-footed because I was expecting prices to maybe hang out around the 26,600 levels, but the market have gone beyond 27,000 and still continue to go higher. So maybe I will have to revise my outlook for a while, but by and large, my overall view for Nikkei 225 is actually bearish. In fact, among the major equity index, I think this is among one of the most bearish outlook that I had, because considering the Bank of Japan could be my opinion, okay, this is basically my opinion. I believe the Bank of Japan has lost control over its yield curve control. The market wants to push the yield higher, meaning to say that they expect the Bank of Japan to actually do away with the negative interest rates and then allow interest rate to float. Okay, I know the Bank of Japan cannot do that because that will mean that the the cost of servicing the enormous national debt is going to be so much harder, so much more expensive. So they have been trying very, very hard to suppress interest rate from going up. But when you look around the world, interest rate has gone up so much since last March, and Bank of Japan is the only major central banks that have been artificially trying to suppress, and this is going against the global trend. Interest rates are likely to stay high, and for Bank of Japan to try to suppress it, I think it's going to be a lost cause. Eventually, they will have to liberate, okay, themselves from this artificially low interest rate. So we will, so that means if interest rate goes up, it's definitely a negative for equity market, in particularly the Japanese equity market. So this is an opportunity, okay. If the markets start to lose momentum on the upside, start to come down, and then give us a clear selling signal, this is where I want to be, okay. I'm actually very bearish on the Japanese equity market. Over in the foreign exchange market, we can see dollar yen continue to edge higher. Yesterday, highest price was 130.89, and you can see that within this falling price channel, market is already hitting the ceiling of this price channel here, and so far the market has respected this falling channel. So for a time being, there is every possibility the market may start to drift lower, okay. So this is based on technical, and we will see. And over in dollar, euro versus the dollar, euro actually managed to go higher to 1.0927 last night. And so far, it has been trading below the midpoint of this rising price channel here. So for the market to actually hit 1.1, I think that one is maybe a mountain too far. Okay, I do not believe that it will be able to do that in any sustained manner. So actually, I've turned bearish on euro versus the dollar. So all I need is the market to break out of this rising channel, break the support here, and then continue to trade lower, stay below, close below, and that will be my signal to actually add on to positions, or not add on, to look for selling opportunity. And currently, I have no position in euro versus the dollar. Okay. Over in Aussie. Now, the Aussie market, because it is a commodity currency, and commodity prices are actually being relatively firm, especially grains, okay? So that should benefit this currency. So as the dollar started to stabilize, and I think it's starting to go up again, and if both currency, the Aussie and the dollar both want to go up, that means the opportunity may not be in this currency pair here. More likely, if you want to take advantage of the Aussie strength, maybe you can look at Aussie versus the yen, for example. Okay, do the crosses for Aussie against the dollar. I think both are competing for dominance, so it's going to be very restrictive in terms of trading range. Okay, however, the same cannot be said about Kiwi dollars. I do have a view that I'm actually hoping to time this thing. Hopefully, towards the month end, I want to actually look for opportunity to sell this Kiwi versus the dollar, because we all know that the current Prime Minister Jacinta Ardern is going to step down. I can't remember the exact date that she said she want to step down. It's probably February the 5th or February the 8th, and to date we do not know who is going to be taking over the prime ministership. Okay, so there is a bit of uncertainty in the market, and the market don't like uncertainty, because we need to know who the next PM is going to be, so that we can gauge for ourselves, is he pro-trade, or is he going to be more of the same as the current prime minister. So we want to need to know his views, or his or her views, to get a sense of knowing where the various Kiwi asset is going to move, especially the currency. So based on these uncertainties clouding this thing, I do believe the market may be in for a period of instability. So I'm actually looking for a chance to go short on the Kiwi versus the dollar. Okay. Now over the dollar versus the Canadian dollars, that one is not very obvious. Earlier on, I did mention I think the market, the dollar may actually stabilize and maybe starting to go up, but that cannot be seen obviously in dollar versus Canadian chart here, because you see Canadian dollar versus Canadian dollar, it remains very, very weak, although the market right now is holding very well above the 1.33. So the 1.33 handle is going to be very important. If they can hold up this month, then there's a possibility that it will stabilize. Okay, all I need to know is look for a confirmation that this market has stabilized and starting to go up, and that a break of this near-term resistance line here will be one of the clearest signals you can ever get. So let's see whether what happens in dollar versus Canadian. Okay. Over in crude oil, we continue to see firmness in the energy markets. Over in crude oil, you can see last night we have a high of $80.64, which is not enough to clear beyond last week's high of $82.66. This was actually traded last Wednesday, and based on the structure of this, because this is possibly a three-wave rally. So I think based on this rally, the equality price is at $83.87. So there's a very good chance price may continue to go higher, trade beyond $82.66, and even the last month high of $83.34 to go into this bracket of prices. I think this is where I think the market is heading. So I'm still bullish on crude oil for now. Something interesting happens in the natural gas. You see natural gas may be showing sign of stabilization. It has been falling and falling and falling for so long that it has turned relatively bearish. Okay, so the market, they'll come to the point, because this is still a commodity, there must be some value attached to it. Okay, so I begin to see some green shoot signs that possibly natural gas prices may have already bottomed or is about to bottom. So there could be a very large upside move potential. Do look out for this counter trend move. Okay, but I think you'll be relatively large. Okay, so now we can see last night traded a low of $3.09, and the market started to rebound and stays above. So maybe we are seeing the first green shoot of a rally. Okay, now over in precious metal, you can see gold prices remains very firm. This morning we have a high of $1,937.05. Okay, not enough to clear this high that we saw last Friday at $1,937.51. So this is remaining very firm. But something else is happening in the precious metal market, as been seen in the silver market. So silver last night have a major breakout of a price channel to the downside. So if that is the case, then it may actually spill over to gold prices, because you must understand prices of gold has been going up since November last year for a 2 months old rally, more than 2 months old rally. Okay, the market is full of long positions. So the market now is like, can you imagine a boat where most of the people are on one side of the boat? It's very easy to capsize. Okay, so all the market need to do is to trigger off key stock levels, okay, and then the market will just simply collapse. Okay, so do watch out for the potential in which the market may be attempting to trigger some sell stops on the way down. As the market goes up, every nearest low is a major trigger point. For example, this trigger point could be here, and it could be also be here. Okay, so based on what market tends to do, when the market is heavily on one side, okay, in this case it's very bullish, it has been going up for more than 2 months, so there's a lot of long orders. Okay, meaning to say people who have been long, where do you think you'll put a stop? I think if you are a very short-term trader, you'll put just below $1,911, or if you are a medium-term trader, maybe you put it slightly further lower at $1,895. Okay, so these two are key levels. If the market goes down, you can expect a lot of sell stop order to be triggered. Okay, so that could bring prices lower, and this is what I'm looking for, because I still want to buy precious metal, in particularly gold. Okay, so we can see earlier on I did mention that silver price actually have a breakout of the price consolidation. Okay, since the beginning of this month, we can see the silver price has held very well at $23.11 to a high of $24.55. So it has been trading within this bracket of prices for all these 2 weeks. In fact, this is the 3rd week already. So if this is the case, last night breakout of this low level here have triggered a lot of sell stops. Okay, because this market has been in a bull phase since last September, even 2 months longer than gold prices. So you can see the accumulation of stop orders near the most recent low, which is $23.11. This caused the market to actually come off, and then soon after that the market will rebound. This is a very clear sign that this is a wash trade. Market is trying to trigger stops and then quickly reverse, and then for those who have been stopped out, maybe they will jump back in again, and then for all you know, tonight you'll come back down again, and now the stock will be at $22.70. Okay, so do watch out for another attempt to clear the weekends. Those people who have been buying very late in the game, these are the ones that are very vulnerable. So if you continue to hold on above let's say $24, when the market go down to $22, of course, you know, you will not be very comfortable, you want to get out. Okay, so use this mentality to see, okay, if the market is so long, the boat is lopsided, it doesn't take a lot to flip this boat over, okay? So the market is super long, very much like gold market, okay? Do watch out for this attempt to actually trigger stocks, okay? Over in crypto, we can see that crypto prices remains very, very firm since the beginning of the year. For 3 weeks now, we can see prices of crypto across the board has all rallied massively. Bitcoin is already trading above 23,000. The high traded was $366.56. That was traded on Sunday, okay? But over the last 24 hours, prices have been relatively firm. There's no new low, no new high traded. So market is just buying time, consolidating. I think it's just trying to build a base to launch even higher, okay? There's a possibility here, okay? So same thing across the board. We see Ethereum also showing the same phenomena, but the high here was traded on Saturday, not on Sunday, $1,680.70. That was the high so far this month, okay? So there is the possibility, looking at the structure of this price movement, this market is consolidating, trying to build a base to launch even higher, okay? Ripple had a marginal high this morning at 0.4330, and not so, I will not call this as very stable, okay? Yes, January prices has gone up, okay? Like we say, a rising tide lift all ships. So Ripple, in the absence of any news, is basically enjoying the momentum higher, okay? The one that we want to watch is actually Cardano. Cardano has been very, very powerful. You can see the market has actually rallied, and it has just stopped short of this blue line here. Now, this blue line is a resistance line going back all the way to last May. So it has, this line here that we see has been forming for the last, more than 9 months, okay? So this is a line that we all need to respect because it's a very long-term resistance line here. So the market come very close, and it's very obvious the market is respecting this this blue line here, which is the resistance line going back all the way to last March. So as the market go back to challenging it, it must clear beyond, okay, clear beyond this resistance line to have any chance of actually propelling higher. So we have to watch this line here very, very carefully. Over in Solana, if you have only enough to actually trade one token, okay, I think this particular coin here has the most potential because the structure here is so stable. It's 45 degrees, and I said 45 degrees, whether it's down or up, is the most stable kind of gradient. So if you have to take a view and want to go long on crypto, maybe this is one point you can consider. As the market pulls back to near the support line, if it ever, then that will be your cue to look for a reversal sign, okay? And if a buy signal does appear, take it, okay? Because I think this one has a lot of potential. Okay, guys, this is all I have for you today. There's no major US statistic that will be released. The only one that we will have will be in the afternoon between 4:30 to 5 o'clock. We have the Germany PMI, we have the Euro area PMI, we also have the UK PMI. So basically, they are all concentrated on Purchasing Managers Index. So there you have it. I will see you again tomorrow. Take care. Bye-bye.